Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We have a lot to cover. We had Nvidia earnings yesterday after the bell, along with Crowdstrike, Salesforce, as well as more earnings this morning. So it was really a plethora, a lot of earnings that were hitting the market yesterday after hours and this morning, creating some interesting volatility. Now, Nvidia did sell off on earnings as much as 7%, but the markets are fighting back right now, and we are actually net positive on the NASDAQ and the S&P 500. A lot of people scratching their heads. I'm going to delve into why this is happening. So let's get right into it right here. So here's your Nvidia chart, right? So this is after hours right here when earnings came out. Initially, the stock popped slightly because they beat on earnings and revenue. And remember, the algos are what read it first. They read it before any of us have the time to read it. We just can't read as fast as a computer. So you saw the initial pop, but then people started to say, wait a minute, the earnings numbers, they're good. In fact, they're very good, but the price of the stock is so high, it can't justify that. And so the stock then started to crater to the downside and dump out. The stock market as well in the after hours really came down substantially. This was after hours till 8 o'clock right here. And then at 4 in the morning, we started to trade. And you could see again, right away, it was up, floating back up, almost back to the break even, came within about $2 of break even, and now it's trailed off, trading down a few more dollars than that. So again, we're down $4 on the day, give or take. That's not a huge move. And I think the key is this, is why is the S&P 500 holding up? And if we look at the S&P 500 here, pre-market, this was yesterday after hours. You can see the dive in the market and then the rally to the upside today where we're net positive. And the reason, in my opinion, why the markets are not freaking out, number one, the earnings were still very, very good. So it's not telling us there's a major slowdown in the AI sector, in the chip sector, or the economy. And so I think the markets are saying, okay, at least it wasn't horrible. If Nvidia had missed the numbers, forget about it. That would have been a huge collapse in the stock market. They beat on earnings, they beat on revenue. They just didn't do quite as well as the dreamers had hoped they would do. And so overall, the market's able to shrug this off. And the market's saying, okay, you know, they were good. They were, in fact, very good, but it's down a little bit, not down a ton, so it's not crushing things, and therefore the S&P 500 is neutral to positive. I think the other factor here is that we're now seeing a shift from everyone waiting for Nvidia. Okay, Nvidia's over. It wasn't horrendous. Now everyone's looking to the PCE data, which is the inflation data that the Fed pays the most attention to, and that will be out tomorrow at 8:30 a.m. I'll cover it right here on the Game Plan tomorrow. All right, so again, the general prognosis here is that PCE is going to be very good. It's going to enable the Fed to cut in September, and the markets are already looking forward to the Fed being lenient and cutting interest rates. Okay, so that's where we are on the S&P 500 pre-market. Now, we did get jobless claims out this morning. They weren't really a big deal today. Expectations had been for 232,000 people filing for unemployment, which is basically pretty low in general historically, and we came in at 231,000. So almost exactly in alignment. So it didn't really cause any sort of shift. We did see the S&P inch up initially on this candle and then just right back to where it was trading prior to that news. Okay, so we have a basis now. We know why the markets are trading neutral to positive today. We're not up a lot, but we are net positive even with Nvidia down, which again, as I said, a lot of people scratching their heads. But there's a lot of other big movers this morning we want to cover. So I'm going to get right into it. We're going to go into charts here. So first and foremost, if we flip back to Nvidia and we just look at it, where could a level of support be? Okay, so number one, we can see these are the earnings numbers that I had in the whisper numbers. And by the way, just to go over this, so remember yesterday when I told you guys, so this was what earnings were expected to be, 65 cents a share. They came in at 68 cents a share, but the whisper number was 71 cents. And that's why the whisper number is actually very, very important, is because this tells you really what the market is really expecting. Not what analysts have said for the last 3 months to expect, but what is as of today going into earnings. What are they expecting? They were expecting 71 cents, came in at 68, therefore the stock is down. Now, in terms of technical support, the first thing that I see this pivot low down here and these lows over here, right to here. So the first thing for me that I'm going to do is I'm going to draw that trend line in. Let me erase these lines so that you guys can actually see me drawing this in. If we take a trend line here and we essentially stretch it right through here, we get a major level. So what this tells me is you have this flat top right here, right here, right? So we have this flat top right there. We have this under trend line right there, and they're both major supports. So listen, I don't expect Nvidia to come down to $96, $97 today, but what I'm saying is that if we do sell off in the coming days or weeks, this level is going to be a massive level of support on the stock. Now, if at any point that ever breaks, which I actually do think it'll break maybe late this year or next year, then that's where you get your next big leg to the downside. That would be a tremendous leg to the downside because it would be major multi-factor support that would be breaking on the charts. All right, next up we had yesterday after hours, CRM announced earnings. This stock again had really poor earnings last quarter, so they came back with a strong quarter. The stock bouncing up. You could see again closing yesterday right around, looks like around 259, trading at 271 right now. There is a level that I'm watching for the day trading, Apex Live day trading room today, and again that's right around 278 to 280. To find that level, we flip over to our daily chart and we zoom out. And remember, what we're looking for here when we're trading or investing, and by the way, investing, if you're technicals for investing are the same thing, it's just a bigger time frame. But the point being is you look for multiple trend lines or factors to coincide. Well, we have a gap fill right here, and that's at 279. We have an upsloping trend line right through here, right through here, right through these lows right here, and that's right around here. And then we also have this high pivot and this high pivot, and they all coexist right here around 278 to 280. So for me, as a technician, I see, okay, it's trading around 272, 271. If it pushes up during market hours in the first, let's say, 30 minutes of the day, runs into that level, I might be able to get a quick trade on the short side, rejecting it to the downside. Now, again, only a day trade for me. This isn't going to be a swing trade short, but nonetheless, that is an interesting level for me on CRM. Crowdstrike. So Crowdstrike initially rallied on earnings. We all know what happened to Crowdstrike. Unless you've been living under a rock, you know that they had that big outage that caused the airline, a fiasco in the airlines and all that stuff. I got caught up in that when I was traveling back to Oregon about a month and a half ago. But the point being is initially the stock spiked and then it came back down. To be honest, I think it came back down. I was looking at some of the conference call comments. To be honest, it seemed like they were sugarcoating things. Like they kind of were just brushing it off like, oh, it's, you know, it'll affect our numbers by just a little bit, no big deal. I think initially that was a positive, and then investors were like, I mean, that's a big reputational hit right here. A lot of new clients are going to look for potentially an alternative after what happened to CrowdStrike, and I think that's why the stock came back in. Now, it's not down a lot. If we look at it right here, 264 close yesterday, trading at 260. I don't even bother with levels on this because it's not worth my time to look at levels when a stock hasn't moved much. Because again, volatility is what is good for trading, right? And if it doesn't have volatility, there's nothing there. Okta. So Okta here, big drop on Okta pre-market on the back of earnings, trading at $84. This is after closing at around $96. So that's a big percentage move. So what we do is we flip over to the daily chart here. All right, and we look and we say, okay, so 84, well, number one, I have a trend line right here, right? So we have a trend line right down here through these lows, and that's right at $80. So $80 right off the bat, there should be some sort of support right in that vicinity. Now, if it does break that level, we have a secondary support line just below it, and again, that would be at around $73 to $74. I'll put that level in here, and we'll take these lines off so we can see it, and there it is right here. You can see this flat top right over here. That gives us that level of support. It also kind of comes back right in this area. So those would be my two levels on Okta. Okta is a very volatile stock, folks. So it moves in big movements. So it's not unheard of to see it go to 80 or even potentially 74 on the charts. All right, let's keep going because there's a lot out here, guys. Affirm. Now, this one's having a monster day, trading up 25%. 25% on this stock. Now, number one, this is a buy now, pay later stock. And I want to tell you something, guys. Buy now, pay laters, and I've been through many cycles in my trading career. Buy now, pay laters do really well when the economy starts to weaken, but it is not in a recession just yet, right? So essentially what we're seeing is people are starting to struggle. So they're saying, well, I need to buy this, or I want to buy this, but I don't have enough money. Prices have increased due to inflation, so I'm going to use buy now, pay later. So they do really well when the economy is slowing, but the problem is that when we go into a recession, a lot of those people that did buy now, pay later stop paying, and then the stocks do really poorly. So in terms of cycle work, Going into a recession, these do much, much better, and we're seeing this stock up 25% today. And again, I would just strongly encourage you, take a leap and understand that if buy now, pay later are doing really well, it's not really a good economic sign. You could actually use these stocks as economic indicators. The point being, it's rallying right now. If we get into a recession, that's when you want to short these things on a swing trade basis, because again, when people stop paying, it is what it is, and they really suffer. Now let's look at a trading level today. It's trading at just under $40. If we flip over to the daily chart here, number one, I see a little bit of a level right up here around just below 42, 41 and change to 42. That'll be a level. There's a secondary level at 43.80. And then there's a gap fill just above that at 45. So those would be my three levels right here on the chart to take a look at in terms of, do I want to take a short trade for a day trade on these? And then in terms of a swing trade, I mean, again, let it do its thing. Remember, we're just in the slowdown process of the economy, so it may have another quarter or two that's decent. I don't know. But I would start to say, once you get up in these upper ranges, you start nibbling a little maybe on the short side on a swing trade. And that can put you in a position that when we do get in a recession, you reap the rewards maybe back to $20, somewhere down in this lower range, which could be a significant win on a swing trade basis. But right now, those are those levels there on a firm. Now, let's talk this morning, right? So listen, there were a couple others, Hewlett-Packard not moving much, et cetera, but let's go to this one, guys. This one's a monster hit, and honestly, this is the one I'm the most excited about on a swing trade basis, and I'm going to tell you why. So this is Dollar General. We all know the dollar store, Dollar Tree, Dollar General. Their earnings were tough. They were tough. There's no doubt about it. The stock is telling you that, right? It's down 25% on earnings. Huge drop. But what we're seeing here is a divergence in spending. All right, so I'm going to walk you through my thought process here. But I think when you see the light bulb goes on, you're going to be like, holy cow, that makes a lot of sense. So what you're seeing here is you have a divergent economy. You have people that are invested in the stock market that are not having to go down to a Dollar General to buy goods because they're making lots of money in the stock market. The stock market's near all-time highs. So you have those people still in the luxury or upper end tiers of retailers. But then everyone else, if you're someone, and again, this is horrible, but if you're someone that has to shop at Dollar General, you're probably not invested in the stock market, right? I mean, let's be fair. And so those people have been crushed by inflation. So you have the middle class to upper class wealthy that are still shopping at the Targets and the other places, while you have the lower income that are now struggling to go to Dollar General and even afford Dollar General. Watch this. The key on this trade and why I like it down here at such a massive discount as a swing trade, even as a 12 to 18 month hold, is that when we do see the U.S. economy enter a recession, and the stock market finally comes off these all-time highs and has, let's say, a sustained 10, 20% move down, there will be people that are in the middle to upper income that will, unfortunately, when they lose their jobs, they're going to have to trade down, and Dollar General will get a lot of that business. Right now, there's a clear divergence in this, right? There's a divergence. You have low income and high income, right? And there's the low income's just suffering here. Sorry for my L down there, but you guys get the point here. But eventually, these middle income, higher incomes, as the stock market falls and jobs get lost, they're going to have to trade down, and this is somewhere where Dollar General, DG, Dollar General's down here, and so you'll get a lot more of these to trade down to it. Does that make sense, guys? Hopefully that does. But anyways, that's why, honestly, I'm a little excited about a discount. It's not to say it can't go lower. Let's be fair. These stocks, again, I've seen stocks right now go crazy in terms of downside. There's been a lot recently as well. If we look at the daily chart here, what are the levels here? So I'm going to go to the weekly because you got to go back a long way to see these low pivots. But there's some major technical support going all the way back here, right around this 92 to 94 level. Take a look at this, guys. This is a very intriguing level for me. So if we look at this, we're going back to 2016 right here, this highest pivot before we came up and we chopped and we broke out, right? And so what you're seeing is today, Dollar General is retracing into that key level. And again, it's not to say, there's lows here around $90, $88, somewhere in there. So it could go a little bit lower, but you even have more right here around 80, right? So my point being is that in this range here, right? So all of this range right here, to me, if you have that long-term thought process and you're thinking 5 steps, 10 steps ahead, this actually does look interesting at these levels. Eventually, they should start to do better. Unfortunately, when the economy gets weaker, they'll do better. Okay, in any case, so that was my Dollar General analysis there. Best Buy is a little bit of a higher-end retailer, and what a move on this. Look at this pop on Best Buy. So again, Best Buy doing really well, jumping tremendously, closing yesterday around $88, surging up to about 100 to 101. Did put in a little bit of a doji here, a little bit of a reversal. You can see sellers starting to emerge right around 102. If we go to our daily chart on this and look at our levels here, let me just zoom out because you got to go pretty far back to see this. I'm flipping over to my weekly chart on this as well. But to me, it looks like there's a key level here. Yep. So, all right. So look at all these levels right in here. So really between 100, which we're already above 100, but all the way up to about 105 right here. Okay. So flipping back here, what do we have? We have these lows here and these lows right in here and all this sideways chop right here. And that's going to tell us that there's a lot of resistance between 100 and 105, which is where the stock hit at 102 just a minute ago. But again, this would be your zone where you would look for rejection and potentially a pullback, all right, in there. Now, if it gets through there, where could it go? Well, you have this upper range right in here, lots of pivot tops right across this area, and that would be around the 120 level, and then obviously we have our high pivot at 140. I'm not thinking it gets to 120 or 140 today, but I do think it could get as high as maybe 105. 105 to me probably today becomes an intriguing day trade short play. Okay. What I want to do now, guys, is we're going to take a spin on our wheel of appreciation. So let's jump into that real quick here and do that. And again, yesterday, don't forget, the Winning Trader Series 1, $5,000 course right there, 20 hours of everything that's in here, guys. It's pretty amazing, and it does change lives per what people have said after taking it and studying it for time and time again. All right, looks like Leela Inala. I apologize if I'm crushing that name. I apologize. In any case, congratulations. You can see it on the screen right here. Message support@verifiedinvesting.com and pick up that Winning Trader Series access. That is an awesome one. And again, you know, whether you trade crypto, commodities, or stocks, it's universal. Remember, everything I do, remember, in these, I go over crypto, I go over stocks, I go over commodities. The technical analysis that I use is super simple, drawing trend lines. Listen, well, by the way, you just don't watch the Winning Trader Series and become a genius trader. Like, just like a brain surgeon, you actually gotta kind of study it a little bit. But it's the beginning of a journey that takes you to a whole new level of financial success, and that's the key right there. All right, let's walk over to our wheel here, and let's do a quick spin, find out what we're giving away tomorrow. Oh, there we go. All right, look at this Verified's trade setup scanner. So this is our scanner on the website on Verified Investing, guys. It scans stocks here. Right now, we have it just set for stocks. We're going to debut the crypto one hopefully in a week or two. But nonetheless, this scanner scans a total of 8 key metrics. It's meant for day trading. So again, day trading right now, eventually we're going to debut a swing trading one that spits out swing trade alerts as well, and it will be AI. It'll be generally learning as it goes to become better and better. Very exciting stuff here, guys. But if you want to get entered to get access to the scanner, you guys know what to do. Make sure you're following Verified Investing on the socials, and then also make sure you spread this or share this on one of your socials, and just post under this video on YouTube or Twitter where you shared it so we can confirm. All right, we're going to take a quick 30, 40 seconds, guys, to just take a look at the Apex Live Day Trading Room. Let's take it away. Hey everybody, welcome to the Apex Live Day Trading Room, where you're getting multiple pro traders with decades and decades of experience calling out trade signals as well as their own trades, entries, and exact exits for you guys over your speakers on your computer, your phone, your iPad. In addition, you're going to see our screen. So you're going to see, as we move our mouse on the screen on the chart, all the data, all the information that we're doing as we're making money as traders. We are translating that to you guys. Lots of education, literally from 9:30 to 4 p.m. with a small lunch break in between. Everything you need to make money as a day trader right here at the Apex Live Day Trading Room. All right, into the action we go. Let's take a look at Bitcoin here. Bitcoin is getting a nice little bounce. We're back above 60,000. But remember, the level to watch is basically 61,500. So that's your pivot line here. And again, what we're watching again to see is, can price attack this line, this pivot line again, and can it get above that? If it does get above it, just like it was above here, it must confirm, taught in the Winning Trader series, otherwise it's a suspect of a breakout. It's not a firm, high percentage chance that it's a real breakout. In fact, it oftentimes favors a fake out until it confirms. That's what we saw here, right? I mean, it came right back in, went right back through because it never confirmed above that. So it's nice to see a little bounce on Bitcoin today. We're seeing an Ethereum bounce as well, but these are still in weak position. So if you just literally look at the charts and you say, okay, well, what's the bias here? Well, the bias is negative right now because we're below the pivot line. So as long as you're below the pivot line, it favors a slight advantage to a move down like this. If we can recapture the pivot and confirm, it then comes and favors an up move like that to about the $69,000 level. Let's flip over to oil here real quick. And we see oil is bouncing a little bit today. So I'm still short my oil, still in the money. We shorted right up here. But again, upticking here. I expect it to ultimately roll over and come back in and ultimately even break this to the downside here. So we should see further downside on oil in the coming weeks. I do think it does need a little bit of that weaker economic data to really send it through this level of support, but I do expect that to come in the coming weeks, that I do think the data will continue to be weak. And as I said in the past few game plans, I do think that the Fed is sending that message. A lot of people are ignoring it in the stock market, but the Fed, the fact that they wanted to cut in July, or many of them did want to cut, the fact that Jerome Powell has been so dovish and saying, hey, cuts are coming, this is the time, da-da-da. You know, he's basically choreographing that they're seeing data on their side that's not available to us as the public, that is telling us that the economy is weakening faster and faster. All right, next up, let's take a look here at gold today, and gold just continues to hold steady right up into this range. We're still hovering here. You could look at this and say it is a little bit of consolidation, maybe bullish consolidation. Again, my big concern, and I brought this up yesterday to you guys, is that you do, and I don't have it up, maybe I'll show it tomorrow, but there's a negative divergence on the RSI. That just gives me pause. I'm saying, okay, yeah, you know, I guess, you know, negative divergences, you could always have one more move up, but also at the same time, it just is a pause. It makes you say, maybe I don't want to go long here. Let's see what happens. And take it day by day. And so that's what I'm really doing with gold here. I do have a little bit of position still in silver. I still have a little bit of platinum, palladium positioning. But for the most part, I took my profits on our gold trade in our commodity service right up here on that $2,500 Pierce. And I'm just patiently waiting to see if we get a little flush here, or even lower. And again, still net long-term bullish. Still have my long-term holdings in gold, just not the swing trade side at this point. All right, quickly looking at silver here. And if we look at silver, small bounce, really small bounce today. It's losing some of its gains already. Again, it looks like it's stalling out. I really had it penciled in to go right up here, and it hasn't achieved that yet. It shows you that even the best analysis sometimes can be a little bit off, or maybe it eventually is just consolidating and it will have another move up. We don't know yet. That's the key, right? So nothing is in stone. You know, I was talking to this about with members earlier in a video I did, is that it's about probability. So probability favors this, but it doesn't guarantee. There's no guarantees in trading. It's only probability. That's it. Okay, lastly, quickly on natural gas here as we get into the end of this session here today, guys. Natural gas is starting to break lower here. I'm kind of rooting for this mainly because we unloaded our long here. So far, that was a perfect exit. Now I'm intrigued by this level, this trend line right down here, this orange one here, just below $2, as I've expressed to you guys before. All right, guys, I got to get to the Apex Live day trading room where we will be day trading a lot of these levels that I talked about in this game plan. I do encourage you, if you have even a day, there's a one-day pass that you can get. If you ever want to just try it out for one day, purchase that one-day pass. I even think we have a weekly pass. If you have a holiday, if you're on holiday for a week and you're like, hey, I'm going to be sitting home doing nothing, let me day trade for a week. Come join us in the Apex Live day trading room. We would love to have you. Have a great rest of your day, folks. I'll talk to you soon. Take care.